So it's really important for advisors to keep up to date with what's happening with TPD definitions. And this is one that's somewhat sneaking under the radar because TPD's really always been thought of as a commodity, a bit like life cover, wherever you can get it, provided it doesn't exclude things that you're a bit worried about. It was considered to be the same. So often advisors would look for where's the cheapest place to get it and perhaps focus more on the definitions around income protection and trauma that tended to have big differences between policies. We're now started to see in the last 18 months to 2 years changes happening to TPD definitions, and I think a lot of advisors are being caught a little bit unaware of the changes that are happening. We started off with changes taking place last year because of the stronger super laws that came into effect on 1 July. And what that meant was that whether it was a group insurance or a retail insurance policy, there had to be changes to the TPD definitions inside super. For a start, you couldn't have own occupation cover inside super anymore, but you also had a change to any occupation definition as well. And that was the removal of an earnings clause within the definition. So now something that we've never had before is that if you take out a policy with a retail insurer, if you take out any occupation TPD inside super versus outside super, you will get a different definition. And that's something that's not really being spoken about very broadly. For retail insurers, this change that came in on 1 July last year was purely in response to the legislative change. So from 1 July last year, all insurance policies purchased inside super must have definitions that align specifically to one of 4 conditions of release. And the one that is the most relevant for total and permanent disability cover is permanent incapacity. The any occupation definition that was used previously was a little bit more generous than what that clause was. And that's why the definition had to have a removal of an earnings clause that was within it. The way that it works is if you have any occupation TPD, you're being assessed upon are you going to be able to work again in an occupation you're suited due to education, training or experience. Definitions previously though also had an earnings clause where they said we'll put a line in the sand though, and even if you can work in a job you're suited due to education, training or experience, if you're not going to earn very much by doing so if you can't earn more than 25% of what you were earning before, then we'll still pay you the claim even though you can work in a job you're suited by education, training or experience. This is being discussed. There were articles in a number of publications when the changes were made. There's discussions on the risk advisor forums and things like that online as well from advisors. It does tend to be your real risk specialists though who are having these discussions, and those that are generalists and perhaps think of themselves as more holistic financial planners may not necessarily be aware, because of course as we know there's so much to be across at all times just about insurance, let alone about every other topic that they've got to be across as well. So it's certainly a slow burn in that respect.